Hello, and welcome to the Block Explorer. I'm Colin Brightfield.
Hey folks, I'm Cash Upton.
The Block Explorer endeavors to bring more understanding and awareness to the world of crypto and blockchain.
We aim to have a thoughtful discussion about the most poignant topics in blockchain and crypto ecosystem.
We'll help you be more informed and inspired as we navigate this new frontier together.
We're on this podcast here to educate and learn together, wading through the crypto marsh. And remember that none of this is financial advice, and adventuring in cryptocurrency can be risky.
In this episode, we touch on some news before taking a deep dive into what is money. We discuss how money has changed forms over time, the difference between money and currency, and the consequences that government control over monetary policy has had throughout history. We tie it all together with the sound money principle to draw the conclusion that cryptocurrency is a new, better kind of money.
Okay, well, let's dive right in, Cash. We have comments from our Senator Elizabeth Warren about cryptocurrency.
Yeah.
I'm going to fill us in about what she called cryptocurrency and what's going on.
Yeah, there's some jokes going around the internet. To quote Senator Warren, "Instead of leaving our financial system at the whims of giant banks, crypto puts the system at the whims of some shadowy, faceless group of super coders and miners," which doesn't sound better to me, ... And there's more.
Yeah, it sounds like she's trying to paint like crypto people as like James Bond villains or something.
Right, yeah.
In like some underground lair, just like coding away. Why does she have to make it sound like they're so cool?
Right, yeah, it's not as cool as that. And I think that's maybe a lot of people's criticism of the blockchain or crypto is, who is controlling it. They think there's all these like people in the background, but it's actually not. It's all open source. It's out there for everyone to see. It's not some shadowy back of alley deals.
Yeah, exactly. I mean, that's kind of one of the innovations about this whole thing with decentralized finance, that it's like open finance. Ethereum is open source. Anyone can go on the Etherscan and you can look at these different wallets. You can look at where everything's going. You can look at all this information that's readily available. I mean, if you were a regulator, I mean, this is like your ideal situation, that you don't have to chase people around and like coerce the reports out of them, or like really have these elaborate kind of compliance organizations. Everything's already out there.
Yeah, it's already on Ledger.
Yeah, everyone can see it.
You might not necessarily know someone's wallet ID, like who that person is, but you would know that wallet's transaction history.
Yeah, exactly. So on Ethereum, right, every transaction gets a unique hash, right? And then also everyone has a unique wallet address, which is a combination of, another hash code, right? And that's your public address, right? So if I send you, some Ethereum or whoever, that transaction, my wallet address, that gets recorded to that other wallet address, right? And you might not know who owns that wallet address, right? And then so there's a layer of anonymity that can be included in that, but at least the transaction itself, and that can all be verified on the blockchain, and that's visible for anyone to see.
Right. And then my rabbit hole question that we can go down later is, when we're talking about blockchain for like personal identity and that sort of thing that they're doing in like Africa and whatnot, is that linked to a MetaMask type wallet ID as well? Like,
yeah. So everything that is done on the blockchain is an actual address, right? So if you have a wallet, a MetaMask wallet, whatever it is, whatever crypto wallet you're using, there's an address that's unique, right? And no matter what chain you go on, no matter what network you go on, your wallet address stays the same wallet address.
Gotcha. Okay, right.
And so what's actually really cool that Etherscan just launched is there's a new function on Etherscan. So if you go to etherscan.io, that's the website, and they do a great job in innovating in this technology of open finance. So now there's actually a button near the top of the page where you can click, and it shows you not only your activity of a certain wallet address on the Ethereum blockchain, but it actually shows it on any other chain too.
Oh,
so
wow.
You can go and be like, oh, look, what's this wallet been doing? What's the activity on Polygon? Or what's the activity on Solana, right? So you can see what's been going on. And so it's a really good way to, one, track your activity, but also see, get trends. And it just opens up a whole new layer of composability, right? And that's kind of what we're seeing as a major trend in the DeFi space and the crypto space is now how do we go from now we have all these chains, right? We had Ethereum, we had Bitcoin, but now we have this proliferation of layer 2 chains, Arbitrum, Optimism. We have a side chain, Polygon. We have Solana. We have Polkadot. We have some of these other chains as well. And then there's Binance, which is more of a centralized chain. So you have all these different blockchains, but how do we go now between them, right? And usually the way has been kind of like cumbersome, right? Because you have to go to Ethereum first, and then from Ethereum, then you can go to another chain, right? So if I want to go from Solana to Polygon, I have to migrate my assets from Solana to the Ethereum blockchain and pay those transaction and gas fees, whatever that is. Mm-hmm. And then from Ethereum, bridge it to Polygon sidechain, right? So that's another, and then there's a set of fees and some time that takes too. You can't just go right now to Solana to Polygon, but there's things that are being built out to do that, right?
Okay, interesting.
Yeah, it's kind of like looking at like I used to live in Washington D.C. and they have the Metro, which is their subway system, and it's kind of when the subway was built, when the Metro was built, the primary goal, it was built like in the 60s and 70s, was to bring people from the suburbs to downtown, right? And then back out, right? It was for commuters to go in and out, because that's when like everyone moved out to the suburbs, mm-hmm. right? So that was the main goal of the Metro, but it wasn't really good if you're like in the district itself, in the city, and you want to move around the city itself.
Okay, right.
You actually have to go, you can't just go like in like there's no like circular route like to go around. You have to go downtown, change trains at a station, and then go back out of the city. So like almost...
That's like what the
current
current bridges on the networks are like that.
Yeah, so you have to go into downtown, which is Ethereum, which is expensive, right? And then you have to go back out to the suburbs. So, right, if you're in Polygon suburbs, you got to take the bridge to downtown Ethereum, pay the fee, pay the tolls, whatever that is, right? The higher gas fees, and then you got to pay again to leave the city, and that that's cumbersome, right? So, what's cool is all this interoperability that's being built out, and I think we're going to see more and more of it. I think. FTX just announced that they are partnering with Polygon to have a fiat on-ramp right into Polygon, meaning like you can take your bank account that's linked to FTX, which is a centralized exchange, a crypto bank,
right?
And you can literally just put your money straight from your bank account through FTX right onto Polygon, which is a side chain. So this is happening already.
Gotcha. It's building out that infrastructure.
So instead of having to go right to downtown to Ethereum to get onto Polygon, now you can go straight to Polygon.
Okay. Yeah. Wow. And then with that Etherscan showing all the wide variety of all your transactions over every network.
All Etherscan. So there's nothing really shadowy about it. It's actually completely out there in the open. Everyone can see it. So I mean, so to bring it back to the original point is like what Elizabeth Warren is showing when she makes these comments is like, one, she doesn't really understand crypto at all, or she's really misinformed, or there's some kind of other motivation, like politically motivated or something, some kind of narrative that she's trying to tap into that which is politically advantageous at this time.
And I really do have a lot of love for Senator Warren. So I think it goes back to just not having all the information. And that's what we aim to do here on the show is help inform and be an educational resource. And one of the things that we're going to talk about more later too is, how can we be advocates for this, or, inform government officials and people who are regulating and making the laws is, how do we educate them? So we'll definitely be aiming at that.
Yeah, definitely. I completely agree with you that, it comes down to, education and right, we're scared of what we don't understand, right? And I think that maybe there's a lot of people that don't understand crypto, or they don't understand blockchain, and they don't understand this technology, and so they're afraid of it, right? And maybe someone's they heard something from someone and they just kind of take that narrative, oh, like it's digital pixie dust, or it's just like a big scam, and then they see how volatile the markets are too, and so then they like see like and people do silly things and like lose a bunch of money because they're just being irresponsible with their money. Just like people do that in the stock market though too. It's just
you want to diversify. You don't put everything into one thing.
Yeah, exactly. You have to inform yourself, and so what is really interesting is that we have a chance now to inspire people to want to learn, right? And no one can really make you learn this stuff, you really have to kind of like take it upon yourself to study it and things like that. And that's why I think, it's so interesting that how often do we really talk about what is money, right? Where does money come from? And that's kind of what we're going to focus on in the episode today.
Yeah, and there's actually one more event happening that kind of brings it all together. The Bretton Woods, the realignment is happening, which is ties into the kind of a little history that you're going to talk about in a second. But essentially, gathering out the spot of the 1944 Bretton Woods conference to now have a new quote realignment to talk about what is the future of money, and it's all the big thinkers and movers in the economic world.
Yeah. So it's going to be interesting to see what that produces, and I don't even know how I feel about that yet. But considering what happened with the first Bretton Woods situation, and we'll get to that in a second.
Our boy Mark Yusko is going to be giving a talk there.
Oh, great!
Yeah.
Well, I think there's some potential then, because I like Mark Yusko and I like his passion.
Yeah, really passionate. Great Bankless podcast with him on it, talking about some really good principles. So definitely check that one out.
Yeah, if you haven't listened to that episode with Mark Yusko on the Bankless podcast, definitely look it up. We'll post it in the show description so you can check that out. But let's dive into our main segment here about money. We don't even get taught this. A lot of us just go through life never even just thinking ever asking this question, right?
And I guess it goes even deeper, not what is money, but what is money versus currency, right? And so we're going to talk about money today.
Yeah, exactly, because a lot of times we just conflate the two, right? The US dollar is actually currency, right? It's a fiat currency, and fiat is a Latin word for decree or like promise.
Let it be so.
Let it be so. So, and originally, right, it was the promise of that amount of gold, right? But we no longer have that standard, right? But really, how does one define money, right? Money serves three basic functions. And what are those functions? It's a store of value, it's a medium of exchange, and a unit of account. So, money is not the only thing that stores value, right? We have a lot of other things, like we have like houses, we have art, we have all those type of things. But money is different because you can exchange it for other commodities, right? So as a medium of exchange, and it's a store of value. So that makes it different, right? You can't just go into a store and bring your Van Gogh and be like, yeah, can I please have a Tesla?
Because you can't exchange with it.
Yeah, right. It's not a medium of exchange.
Right.
It's a store of value, right? Like a Van Gogh painting is super valuable, right? You could probably get a lot of Teslas for it, but you just can't. Tesla doesn't take Van Gogh paintings as payment, right?
Not yet.
Not yet, at least. I don't know. Maybe Elon Musk would. Who knows? He's kind of eccentric. Maybe he would do that. But anyway. So what's another thing that money needs to do? Besides store value, it needs to be a medium of exchange, which we just talked about, right? So
right.
It needs to facilitate people buying, selling, exchanging goods and services. And then lastly, money is a unit of account, which means that it measures things, right? It measures how much things are worth, right? So how do we account for value? We account for it in terms of money, right? And it helps us communicate value, right?
Right. Mm-hmm.
If you're looking for a new job, right? You look at the salary that you get paid in, because that shows how much value you're creating for your time and effort. Right? That's how we might compare jobs, right?
Mm-hmm, mm-hmm.
So it's a unit of account, and it's actually really important. It seems kind of like, oh, like that's just like my bank account. No, it's actually how we perceive. It's what we use as a measure of value. We need something, and we need a measuring stick.
Agreed upon value.
Agreed upon measuring stick, right? And so that's what money does too. So
you wrote down money as a meme. I love that, because we were talking about memes earlier, and the whole concept of endemic. Tell us what you're thinking.
Yeah, so money is a meme. I mean, because really, right, money ultimately is defined by people and what they do. So when people use something of a medium exchange, it becomes money. So like we have to remember that money is a human creation, and as a human creation, money essentially is a meme. What is a meme? It's a shared, agreed upon idea, and paradigm that is easily shareable, right? So like the fact that we have a conceptual consensus around the U.S. dollar is valuable forms a bedrock of economic activity in the United States, right? And then even the world, right?
And money's taken many forms over the time, right? In different cultures. The salt and gold trade, right? In Africa, like at that point in history, salt was worth as much as gold, and they were trading it back and forth, and that was their unit of exchange.
Yeah, there's been all sorts of crazy things used as money, right? And I mean, in the time, we might call it crazy, but in the time, it made sense.
Beads, shells.
Yeah, yeah. There's a great story about the rye stones that were used on the island of Yap. So the island of Yap is a small island in Micronesia.
Okay.
And they used these giant stones for money. And they were big stones carved in circular shapes with a hole carved out in the center. And the way that they quarried them was actually getting in a big canoe and taking a team of tens and dozens of people, and they would go 300 kilometers to this other island called Palau, and they would quarry them there and then either float them in a raft back and then go chase them after, because they would trust the currents of the ocean to bring them back to Yap, or they would put the smaller ones in their canoes, and then they would get back to the island, and they would be used as gifts to the chieftains. They would be used as money. The bigger ones, they would never even move. They would just stay in one place, right? And they kept track of who owned them through oral tradition. So it's like, okay, like right now, like Sally owns this big rye stone, right? And then like Sally's like has a payment and wants to buy something from George. So then she's in the town, they would say, Sally would go and announce to everyone in the tribe of Rye, okay, I'm buying this from George, and now he's taking control of this rye stone. And everyone's like, okay, cool, now that's George's, right? And they're so big and so heavy, right? You could never move them. You could never steal them, because everyone already knew, like, oh, like that's so-and-so's rye stone. Like, you can't just be like, now this is mine. Everyone's like, no, it's not. We all know that it was decreed this other person's in like the town oral history.
Public oral history.
Yeah.
Just like public blockchain history.
Yeah. So it's really cool. But then what happened is new technology was introduced, and the whole economy actually ended up collapsing, because what happened was you had British explorers came there, and they saw that this was the system of money, and they saw that they could exploit it. And so they made friends, because they wanted to buy the coconut oil from the locals. And the locals didn't necessarily want to trade with them, because they didn't have anything that was valuable to the locals. And so they had the ingenious idea. They went to Palau with their iron tools and their modern technology, and they quarried a bunch of these stones and then brought them with their bigger boats all the way to Yap, and were like, look at all the stones we have now. Like, can we get some stuff? And at first the chiefs were like, no. These are modern ones. They don't count. They're not as worth as much as the old ones, because they were made with modern technology by white people, and like they're not as good. But the locals were like, hey, like, I'm trying to make a buck. Like, they got stones. I'm gonna sell my oil. So a lot of the regular peasants and stuff just sold made economic transactions with them, and then it flooded the market with rye stones. There's way too many, and then it started tribal wars and arguments, and then eventually the whole economy collapsed. Right? So this is a really good lesson on what happens when the money supply gets inflated, or when there's a new technological innovation that comes in that makes the stock to flow ratio of a certain money change significantly over a short period of time. And the stock to flow ratio is how much supply of a certain money exists versus how much flow, how much more of that money is added to the global supply, right? And so like a high stock to flow ratio means like there's a lot in the world, but only a little is added every year. So like gold, right?
Yep.
There's a ton of gold in the world, and every year it's pretty hard to mine gold, right? So only a little bit is added each year.
Yep. Yeah. You said something, you took notes, like 190,000 tons of gold has been mined, and each year 2,500 or 3,200 tons of gold. is mined further?
Yeah, so if you compare that stock to flow ratio to, the stock to flow ratio of some other assets, right? If you look at silver has a higher or lower stock to flow ratio because it's
More flow coming in.
More flow coming in.
Yep.
Yeah, like there's about 10 to 15% of the world's supply of silver is added every year, is increased every year versus gold, which hovers around, like 2% or something like that. But yeah, so, I love this story of Yacht because it really just demonstrates, how money can be completely manipulated through an outside actor coming in and bringing in another kind of way to access the money, right? Or to create value. And it really kind of sums up, how money can change over time too, right? I mean, they used to use these stones, and now we're using paper currency, right? So like we kind of have this kind of idea in the United States where it's like, or just in our culture, I feel like, where we just grew up and like money's always been like these paper dollars or like credit cards or whatever, and it's just kind of like we just kind of assume that like that's what money's gonna be.
Right.
We forget that like throughout history, like what's been used as money has changed like many times, and to assume that it will just stay stagnant is to like miss the point and like understand that like money has constantly evolved over time, human history, and it will continue to evolve.
Because what's valuable to those people at that time, it changes all the time.
It's not just what's valuable, it's also like what checks off these boxes, right? Like what is a good medium of exchange? Mm-hmm. What is a store of value, and what is a good unit of account, right? So like these rhinestones, they're okay, but they didn't really check all the boxes out great because there's not the best medium of exchange because you couldn't really bring them around, right? You couldn't just like put one of these big rhinestones in your pocket and then go shopping, right? They like stayed in one place in the village, so it's just like okay, like, and you can't really cut them up too. So right, say if you wanted to buy something, you wanted to buy whatever, some cattle, and they cost like a quarter of what that.
Yeah, you can't take a fraction of it.
You could just you could try to fractionalize. You could go tell the town like, okay, well, like this quarter of this stone is for so and so for the cattle, and then like now you have 3/4 of the rhinestone still left to spend, I guess, right?
Right.
Not the grace, right? Because it's not really scalable, right? So over time, right, like money that checks these boxes better than other forms of money usually wins out, right? And then what usually makes it win out too is the stock to flow ratio, that more valuable money, meaning it's harder to acquire, ends up winning out over the long term.
Right. And one of the critiques of the US dollar was that 40% of the supply of the flow came in the last year or two.
Yeah. So about 40% of the world's dollar supply has been created in the last 5 years. So, I mean, that's when you look at, and that's, yeah. So when you look at like the rhinestone situation, right? Imagine that, but with paper currency. I'll just agree to agree.
Yep, exactly. Which is what we're kind of
different from like, okay, like in Roman times, right? You talk like we have the gold coin, right? And so, that's, you could just take that gold, right? And you could melt down that gold and
it still has value.
It still has value. Or you could, if the Roman Empire went, disappeared, that gold still has the inherent value of the gold, right? And as long as other people in the world value gold, then, the Roman Empire can exist or not exist. But the fact that you have these gold coins protects your wealth.
Whereas world currencies are only backed by the government.
So if your government disappears, then your currency is not worth anything.
Colin, what's stock to flow ratio?
A stock to flow ratio is a ratio that describes how much of a certain asset exists currently in the world versus how much of that asset is being currently added to the supply, right? So if you look at something like gold, right? Gold literally physically has to be mined out of the ground. So it has a pretty low stock to flow ratio because it's actually physically challenging to acquire more gold, right? And we have a certain amount of gold that already exists in the world versus how much gold is entering the market.
Pretty stable right now. The mining techniques bring about the same amount average each year.
Yeah, so it doesn't really change much here because the technology's kind of been invented, and maybe technology advances can influence these things, but we're kind of mining techniques have been around for a long time, and yeah, so the gold's pretty relatively stable. But if you look at like silver, right, silver fluctuates a little bit more, but it has a higher stock to flow rate or lower stock to flow ratio because there's more of it being added every year.
Easier to mine, more abundant.
Yeah, it's more abundant.
And that kind of ties into Gresham's law, right? The tendency for a lower quality commodity, aka like bad money, to drive a higher quality commodity, good money, out of circulation. What do you think of that?
Yeah, so Gresham's law is just this idea that if you have one kind of money that's harder, is what people would often say. Harder money is more difficult to acquire, right? More scarce due to a higher stock to flow ratio versus softer money. Which is, money that's more apt to inflation or more apt to devaluation. So what you have is you have two different kinds of money in the world and being circulated in a certain market. What people will do is they're going to hold on. They're not going to spend the harder money or the more sound money, the more scarce.
They're going to hodl it.
They're going to hodl it, right? And then they'll spend the cheaper money. And eventually what happens is the softer money is the only thing that's in circulation, and the harder money is everyone's just holding on and hodling it. And so it creates this really big imbalance in the economy, and all of a sudden now the things that actually are the creation of wealth can't be bought with the actual money that's in circulation. And one really good example is this in colonial New England, they used horses as a way to settle debts, right? So you would say, okay, like I owe you 10 horses, right? But when I pay you back, I don't have to pay you back with my
You're not giving me your stallions.
Yeah, I don't have to give you back like my awesome race horses or my best work horses. I can give you back like the lame duck horses, right? And so using certain kind of money that has variances in quality, right, is a risk factor, right? And if you look at there's another example where they used to use tobacco in the South.
Right, and they were increasingly flooding the market with more and more tobacco, and then that devalued it. There's better tobacco than other tobacco, and what did that do?
Like, remember when your parents would say that your money doesn't grow on trees, but like in the American South in the colonial times, like money did grow out of the ground because tobacco was money. So yeah, I mean you could just produce as many plants of tobacco as you can, and then that all of a sudden the currency would be inflated, right? So they had people would go around and
burning fields,
they
taking away the stock.
They would go around and actually burn tobacco fields to keep the money supply low, to keep the stock to flow ratio within bounds so that the economy could function. So I mean, we've seen that there's weaknesses and strengths of all kinds of money throughout history, and so the main point is to understand that what we think of as money is fluid. Right, to get this concept out of our head that money is this one thing, and it'll always be this one thing. That money is a concept that changes with human development and as culture evolves. Governments standardize currency because it actually increases the medium of exchange ability for the economy to function. Right.
Purchasing power. It allows people to do business.
Yeah, exactly. Otherwise, if you walk into the barber and you're like, yo, I have 3 pizzas, can I get a haircut? I mean, if I was your barber, I would say yes. But, not every barber likes pizza. What if your barber is vegan? Who knows, right? And so, we need something that's common, right? We don't want to live in a barter economy. If you don't have a medium of exchange that's accepted throughout the society or the culture, then we live in a barter economy. And, that's super inconvenient. Right, because you don't want to carry around a truckload of different items to trade every time you go to the grocery store. Right.
So fiat currency came about, which solved some of the problems.
Well, fiat currency is government currency that's not backed by the gold standard, right? So before fiat currency, we had currency, but it was backed by the gold standard, right? So the central bank had a bunch of gold in the reserves where you could literally take your dollar and go trade it in for a dollar's worth of gold, physical gold, right? And
right.
So that's actually what we call the gold standard.
And so fiat money wasn't really people weren't talking about that until we got off the gold standard in the 70s.
Yeah, exactly. Fiat, we had kind of a blend, a hybrid from the end of World War One through like the 70s, and then we kind of fully went all the way fiat in after Bretton Woods, and really just embraced it when Nixon decreed it in 1971. But what happened at Bretton Woods is really significant because we had World War II, and countries were kind of going off the gold standard, to finance their wars. And if you saw, like, hyperinflation happen in the Weimar Republic in Germany, and we had rationing happen. We had central control of our economy by the government in the United States, right? We had crazy shortages. You weren't allowed to buy certain things, right? I remember stories of my grandparents saying, like, you had to sort all your metal, all the scrap metal was collected, right? So we had this great manipulation of our economy, right? And so after World War II, there was really no way to really get everything back onto the gold standard without admitting to everyone
no one had that gold to pay back debts.
That all the money that was issued wasn't actually backed by the amount of gold that governments were holding, because they just went willy-nilly with it, right? And they went full throttle printing money for the war effort, right? So if they actually were honest about it, then they would have to admit this mass amount of inflation that occurred. So if they had done that at that point in time and repegged all their currencies back to the gold standard, then we would have kind of gotten out of the inflationary mess. It would have been some short-term pain, and everyone would have had to go through that kind of economic recession after, but after that, we would have still had currency that's pegged to the gold, to the amount of gold that you can get from the central bank, and that would have been way more of a substantial way to ground the economy. Instead, we just tried to
U.S. dollar
instead of letting go of manipulating our economy in the currency. We said, well, we're manipulating it. Let's just manipulate it more. So we went and they had Bretton Woods in New Hampshire, and we had some famous friends there. John Maynard Keynes from Britain, and Harry Dexter White was a communist. He was American. That was our American representative, but he was actually connected with the Soviet regime. And we had our friend John Maynard Keynes, and they just kind of came from this tradition where they believed that it was like the birthright of government to be a principal executor in the monetary policy. It was just kind of like an assumption that, like, yeah, of course government should be in control of money, and that's actually the main role of government, which is
So Bretton Woods actually, what came out of that, we started having the global reserve system on the U.S. dollar.
Yeah, so what they did is they created this U.S. central system of where the dollars would be used as the global reserve system of money. And then you can other countries could convert their dollars into their current currency, their country's currency, or they could take their dollars to the U.S. and convert their dollars into gold. So really what this made is just like one giant world central bank, which is the U.S. central bank, that's on the gold standard, and then every other country is on the dollar standard. And then, so it's this weird kind of derivative of the gold standard, almost like the United States is like a national bank, and all the other countries' banks, central banks, were like regional banks. So this was supposed to be like a fixed rate where they could get gold. And what happened was that, the IMF was created to kind of manage all of this rates of exchange between these different countries. And what they tried to do essentially is centrally plan the economy, which was happening spontaneously, when we had the actual gold economy of the 19th century. This was happening naturally, spontaneously, and through the free market, right? Like gold, before this, in the 19th century, right, gold was used worldwide. You could move goods and services worldwide. There wasn't this big giant system regulating everything and managing the exchange rates between different countries and the exchange rate between dollars and gold. And so what they did is they had this giant conglomerate system created to manage what was essentially the fact that all the currencies had been inflated past what the gold standard said. And to stop that from actually being expressed in the economy, they had to create this elaborate system of manipulation.
To manage the fundamental disequilibrium?
Yeah.
of the currencies.
Yeah, as they said, that was kind of like their kind of raison d'etre, right? It was to, hey, we're here because there's this fundamental disequilibrium. And what they failed to acknowledge, this fundamental disequilibrium is because they started inflating the currency without acknowledging it. And now we have to just kind of fudge our way through things and through deficit spending. And so that's kind of where the next kind of turn went, is like, okay, well, we need to spend money now to keep everything moving, because that way we can continue to inflate the money supply without actually ever having to get caught with it, right? And so we have this kind of concept that was called deficit without tears by French economist Jacques Rueff. And it's this idea that you can buy free lunches through inflation, right? Oh, we want to, like, instead of like, okay, like if you wanted to buy something, right, instead of actually like doing the good work of actually creating the value of time and effort, you could just create money and then just go buy it, right? So that's what we were doing with the military industrial complex. We're like, you know what? World War II worked out so great for our economy. We got everything buzzing. Let's keep it going. Good times are rolling. Let's maintain the military industrial complex. So we just, defense spending went through the roof, and we kept spending, and that was considered a great thing for the economy, to have a bunch of debt and to keep the government spending, because that kept everyone employed, right? There was this idea that the more that we spend, the better for everyone. And so government debt, holding on to deficit spending, deficit budgets, all of this became like the new paradigm. And everyone was like, well, it's good for the economy. Sounds great.
Unfettered GDP growth at the expense of what? We got the expense of the environment. We've got the expense of other workers across the globe, right? Globalization led to labor prices going down because we can export, manufacturing to other places. So we're just, doing a lot of this, puppeteering.
Yeah, exactly. I mean, the consequences are too broad and deep to like really fully comprehend, at once. It really takes like time to unpack like how this really unfolded. I mean, it created a culture where there's a political incentive to go to conflict, right? Because our economy now is kind of built on this system of spending, and most of that spending goes on defense, right? And then so there's this whole culture now that's like we have to have these wars abroad to kind of maintain this myth of like our economy depends on a robust military industrial sector, right?
Which is tying into the blockchain for peace argument, which we'll go into a little bit later.
Yeah, but I mean, it all kind of started with the death of the gold standard, right? So once we went off the gold standard, we kind of were like caught, because now countries were coming to us and being like, yo, we want our gold back, because Charles de Gaulle tried to get his gold back, and they actually sent an American carrier, or no, a French Navy carrier towards the U.S. and to get their gold back from the U.S. Central Bank. And then Germany was like, hey, we want our gold back too. So that's when Richard Nixon on August 15th, 1971 announced the end of the dollar convertibility to gold. So this meant that the gold price could float freely.
Based on free market.
Yeah, so the price of gold adjusted for what it actually should be, and everyone just realized how much inflation had really occurred, right? And we saw really insane inflation in the 1970s in the US, right? We had like those very famous like long lines for gas prices, all this kind of things that happened in the 70s. And once we got off the gold standard, that was the first time in human history that the world was based on government money. And this is significant because when new money gets adopted, usually the money that enters the market is kind of slow, right? But this was a massive shift kind of overnight, where we went from a world that had a physical backing for the actual monetary supply to being entirely on the promise of
now all these global political systems can print money at their own whim because they're not being held to this gold in the U.S. Treasury.
Yeah, and when you compare it with like other physical forms of money, such as in history we had cattle or seashells, rye stones like we mentioned before, or gold, right? You can't just create cattle at will. You can't just create seashells or rye stones at will. You can create them pretty quickly, but it's not like you can just print money or now digitally just put in some zeros and ones and make money. So since this happened, we've seen catastrophic episodes of hyperinflation around the world in history.
Right. And, we feel pretty, detached from that here. 21st century in California, stuff's fairly stable, but these places that have been happening over the last few decades, Venezuela, for example, Argentina, inflation rates 25-50% more, where there goes your 401k, there goes your savings account right there. No more spending power.
Yeah, like in Venezuela, they had hyperinflation. And in Venezuela, we had people burning Venezuelan money because it was more like economical to keep
for
warm,
the heat
for the
than
heat
to buy
than
oil.
Actual using them for money, right? So that's when you have hyperinflation, when you're burning your money to stay warm. Hyperinflation, and that's a consequence of the modern era with fiat currency. Before fiat currency, there was very few instances of hyperinflation actually ever occurring. There's kind of one instance before that with the government in France, but since then, there's been countless episodes, dozens, and as these economists have said, that they found over 57 episodes of hyperinflation since the adoption of government currency.
Right. Before that, with the gold, there was like a brief inflationary period in the California gold rush because a lot of gold flooded the market. But other than that, you have to go out and mine it. It's pretty stable. Whereas this is money printing.
Yeah, exactly.
What's that meme?
Money printer go burr. Yeah.
But
Exactly.
what was the Iraqi example, right? The central bank got hit by U.S. bombs.
During the Gulf War, the Iraqi central bank, because obviously they were in war, so they were printing money to keep the war effort going. This is kind of a very common theme. Like how do most countries get their war funding? Well, in the modern era, in fiat currency, they get it by printing money. So Iraq was printing money to fund their war effort, and as we were attacking them, a U.S. bomber actually hit their central bank, and they couldn't print any more money. And the Iraqi dinar pretty much doubled in value overnight because they actually weren't able to inflate the currency at the current rate that they were doing. So there's lots of different ways that government money has consequences for the average person. When you think about it, right, like you have to pay your taxes in government money.
Banks have to use government money.
And usually there's some kind of law that says if you use other kinds of money, that's illegal, or they try to really limit what you can be used as money in legal tender.
And because of this printing of money, some people call it the poor tax. The amount that you're making money isn't growing by the amount that the inflation's happening, or if you're holding stable government bonds at 2%, that's less than inflation. So the wealth that you're holding that you think is a safe bet to keep your money safe and also grow a little value over time is losing its value.
Yeah, exactly. I mean, if you're keeping your wealth in cash in a bank, you're exposed to all sorts of risk, right? You're exposed to the inflation risk like we've been talking about, but you're also exposed to the risk of your government just being in meddling with your finances and your capital, right? At any point, the government can change their mind. They can confiscate capital. They can close bank accounts. They can freeze bank accounts. They can stop you from accessing your money. And usually, like when there's a time of catastrophe or crisis, these are exactly the times when the government gets involved and stops people's access to money. And then that's also how government control of money has turned money from a reward for creating value into a reward for government obedience.
Right. To create wealth, you need to have the acceptance of the government.
Yeah, and government can tap into the banking monopolies and inflate the currency to deflate the holder's wealth anytime they want. They can use it to reward their most loyal supporters. They can impose any kind of taxes they want. And in general, there's a litany of reasons why government control of money isn't necessarily good for the average person.
Kind of brings us around to the sound money principle.
Yeah, the sound money principle is a revolutionary idea in monetary theory, and it was created by Ludwig von Mises, and he's an Austrian economist, and he posited that value does not exist outside of human consciousness, which is a great way of saying that everything is based on legitimacy, and legitimacy is agreed upon by the authority imbued upon it by human beings, right? We are what creates the value.
We agree that it has its value.
Yeah, and so he brings up the example of, precious metals. There's nothing super inherent in them that makes them necessarily more valuable. It's just that we all believe that they are. I mean, obviously there are some actual technical commodity uses of gold, right, for chips and things like that. But in general, it didn't have to be gold, right?
It's shiny.
Yeah, it's shiny. And then you look at like precious gems or whatever, right? It's not just gold he's talking about. Like, there's other precious metals. But essentially the sound money principle, to really nail it down, is it's the affirmative in approving the market's choice of a commonly used medium of exchange. And it's the negative in obstructing the government's propensity to meddle with the currency system. So sound money is what makes the market, what the market chooses freely to be money, and what remains under the control of its owner. So if money is not controlled by anyone else than the owner, then there's inherent conflict of interest.
Right, because whoever controls the money gets to dictate a lot of different things.
Yeah, like what do you get to dictate if you control the money?
Political wars, who gets to buy certain things.
Right, they like to say, right, there's a saying, history is written by the victors, but also the victors are also who get to write the monetary policy. And that's what's really has lasting effects, not necessarily like way beyond, the thing, the atrocities of the war is the monetary policy that gets adopted from after the war, right? And so we have, whoever controls the money, they get to control, the rates of inflation. They get to control, what are the incentives in the economy. And it's just like, when Europeans brought beads to Africa, all of a sudden, they had way more bargaining power than the locals because they had great access to this other kind of money and they could do whatever they wanted. And so whenever you have an avenue for wealth that makes it the best way by inflating or controlling the currency, then this becomes like the most attractive way to create wealth. And it's really hard to have a society prosper.
This is like the Keynesian illusion that government spending only has benefits and there's no cost to it.
Yeah, like so as government controls more power, they control the education system, they can control the rules of economics. So they make it increasingly hard for other people to see a different way of the world existing. And this is kind of, we all kind of just grow up with this assumption that, of course, like this Wizard of Oz type of vibe where you have the person behind the curtain just controlling the economy, like there is some way the government could actually ever really control the economy.
Right, we've been brainwashed to think that the Fed, is magically going to keep us at 2% inflation and it's going to be great for everyone.
Yeah, exactly. So we kind of just assume that this is the way things are. We don't question it, and we've been lulled into this almost malaise about like our economy, and then that enters this new kind of paradigm that we're talking about.
Our new paradigm of cryptocurrency.
Yeah, our new paradigm of cryptocurrency. There's a fantastic quote by Friedrich August von Hayek. He's an Austrian economist, 1974 Nobel Prize winner. And he says, "I don't believe we shall ever have a good money again before we take the thing out of the hands of government. That is, we can't take them violently out of the hands of government. All we can do is by some sly roundabout way introduce something that they can't stop."
Some sly roundabout way like the blockchain.
I mean, isn't that beautiful? I mean, that is such a prescient quote. That was in 1974, and now we are here decades later, and we have a new form of money. It is chosen freely by the users of the money. It is outside government control. and it has a highly saleable free market that is resistant to any kind of centralized meddling. And what is that?
Cryptocurrency.
Cryptocurrency. So cryptocurrency is a new kind of money. It is a store of value. It's a medium of exchange, and it is a unit of account. So it checks all those boxes. But what's even better is if we go to the sound money principle, it's also the free market. People are choosing it, right? It's opt-in.
Right.
No one's forcing you to use cryptocurrency. It's opt-in. If you want to use it, you can. If you don't have to. And it's really hard for anyone to obstruct the use of it, right? Because it lives on the blockchain, because it lives on the internet. There's ways to maybe try to limit it and things like that, but because it's like kind of like cat out of the bag situation, there's only certain things you can do. It's like squeezing a balloon, right? You squeeze here, the air goes over here, right? China's clamping down on mining operations, so the mining operations are moving, but that's even grounded in physical space. What's crazy about blockchain and the cryptocurrency is that it doesn't live in physical space, it lives in the digital space, and there's really no way to clamp down on just the whole thing all at once.
Right. You need computers, but they can be completely spread across the world.
Exactly. So bringing us full circle, we realize, that currency and money are different, right? So there's a difference between currency and money. What we use as dollars, that's currency, and it's the promise of money. But that promise is been decoupled from its actual value proposition. So really, it's just the word of the U.S. government. And as history has shown, not just the U.S. government, all governments inflate their currency, devalue the currency, make it less valuable over time. And so if you're relying on your currency to be your store of value, you're at risk of letting your wealth dissolve.
Right. It's the wealth tax.
Yeah.
You can't earn money at a higher rate than inflation is. You don't have your wealth in assets like land or other, pieces of art or things that are also going up in value, more than inflation, and thus taxing the poor and not allowing for the burgeoning of the middle class.
Yeah, exactly. So what we see is that controlling the money supply is an avenue for governments to control people, right? And so this is also why you have a lot of governments pushing back on cryptocurrency, and maybe this is where that narrative with Elizabeth Warren comes from, is because controlling the money supply is a fantastic means of controlling the populace, because you control the economy, you control kind of the bedrock of culture and society. So if you are embedded in the status quo, if you have vested interest in the certain power that you have, or the certain way that the system works right now, then you see cryptocurrency as a threat, because it actually is a way out from under the thumb of government controlling monetary policy.
Couldn't have said it better myself.
Yeah. So there is that vector, right? And as a proponent of cryptocurrency, because I see the value of what's being created right now in the future and where this could go, is that we can actually get to a more free society, a more prosperous society, where the government doesn't get to devalue your wealth whenever they want. You get to control your own money supply. You get to choose which money you use, right? Are you going to use Bitcoin? Are you going to use Ethereum? Are you going to use whatever coin that's not even invented yet? Are you going to use Dogecoin, right? You get to choose how you denominate your wealth. And it's, like I said before, it's completely opt-in. Like,
right.
No one's holding a gun to your head and making you use a certain thing, right? Whereas like right now, like you have to use, if you want to go and you want to pay your taxes, you have to pay in US dollars, right? But that there was a time, right, not that long ago, where you could choose to denominate your wealth, and pay your debts in silver or maybe gold or maybe another kind of precious metal, whatever it was.
And then taking it one step further, what I love about Ethereum is that it is also a layer for other things to be done on top of on the blockchain. So not only is it a stored value, but it has the ability to track record, and it also is a medium of exchange.
Yeah, I mean, you could say that Bitcoin is also all those things too, right? You could say that Bitcoin is a store of value. People use it as a store of value, and it is a medium of exchange. You can pay people in Bitcoin, right? You can even go to the store around the corner, and I think you can pay in Bitcoin.
Oh yeah, we have a good movie, a little video clip of that.
Yeah. And it's also a union of account. So Bitcoin does hit all those three things. It's just, is it the best version of cryptocurrency? And that's a debate that people like to have. I don't want to weigh in on that right now, but I just want to touch upon, like you said, like Ethereum's different because Ethereum's open source, meaning there's a layer built on Ethereum that allows people to program other apps on top of it. So it creates this kind of ecosystem that's really fertile for innovation and technological growth.
Which
So
allows for decentralized finance and those sorts of apps that are built on top of it.
Exactly. So because Ethereum has a programming language that's native to it, which is Solidity, so now you can go and you can build any kind of app on it, and it's decentralized and permissionless. So instead of like the US government or the central bank being in control of the monetary supply and the networks that it runs on, Ethereum is completely permissionless. Anyone can launch an app and put it on Ethereum, and it's completely decentralized. It lives on the blockchain. So there's no one point of person or entity or party that could have an outsized impact on dictating what happens.
I love it.
Yeah, me too.
It takes the control away from the government back to the people.
Yeah, it's great. And then we have EIP 1559, which is launching within a week on Ethereum, and that is a update to the Ethereum network. And what it's going to do is going to start burning ETH. So right now, if you're on the Ethereum network and you want to do a transaction, what do you have to pay?
Gwei.
Gas. What is gas, right? Mm-hmm. And so gas gets you what?
A transaction to happen?
Yeah, right? So gas gets you, so you want to get a transaction through an Ethereum, you have to pay certain gas fees for a transaction fee, essentially. And those can vary, right? Like depending on what's happening in the network. Like we had some gas fee spikes recently. We had a fun NFT drop on Tuesday, and gas fees hit astronomical highs because of the Stoner Cats release, right?
Right. People were all wanting to put their transaction in quicker, use more gas to get over the finish line faster, and then it went skyrocket.
But what's interesting with the gas fees is that EIP 1559 is going to make it so like now when you pay these gas fees, those gas fees get burned. So right now, like if you pay those gas fees, those fees actually go to the miners in the network. But in the future, once we have this update, whatever your transaction fees to process your Ethereum transaction, those fees will get burned, meaning there's less and less Ethereum in the world, so it becomes deflationary. And that's a very different thing than the US dollar, which is inflationary. We're talking about something where instead of an entity or an organization adding supply to the market, we actually have this blockchain protocol, Ethereum, that's actually going to be burning and decreasing the supply of Ethereum. So we don't even know what that's going to be like, but it seems like, you know, if you look at economic principles, right, this Ethereum is going to become more scarce, right? They're still adding Bitcoin because Bitcoin's being mined, but we're going to get to the point where now Ethereum's being burned. So it was a big gas fee spikes, right? I think how much Ethereum was burned and lost or failed transactions during the Stoner Cats mint, something
700,000 US
I think it was
dollars.
790,000, which is like 350 ETH.
Right.
So that's really sad, and I think Ashton Kutcher came on the Discord and said he's they're gonna do something to refund.
They're paying everyone back their lost gas fees, which
that's really sweet of them.
Nice for you, huh?
I'm gonna hold my tongue, or maybe the cat's gonna hold my tongue. The Stoner Cat will hold my tongue until that happens. But until then, the cool thing would have been if EIP 1559 had already been enacted, 350 ETH would have been burned, which would have been a nice kind of boost for the scarcity of Ethereum. So if you were just holding Ethereum, I mean, it would have definitely helped the price of Ethereum possibly. Right? Maybe it's not that much it's a drop in the bucket, but you get my point. What are you most excited for
We got a Bears on the Block minting actually happening in at time of recording, 14 minutes from now, but it would have been yesterday, Saturday, 2 p.m. Pacific time. Bulls on the Block community can mint their Bears.
Yeah, Cash is super bullish on some NFTs right now. There's a NFT project called Bulls on the Block, and they've been around for a little while, but now they are offering a partner project, and they are airdropping the opportunity to mint what they're calling Bears on the Block, which is a similar project, same artist actually, but contrarian, to the Bulls is the Bears. You have to have the,
gotta have love for the Bears.
Not everyone's bullish all the time. You have to embrace the Bears. So those are releasing this weekend, and you have a week to mint them if you own a Bull. So it's kind of cool to see these different NFT projects and how they are creating value for the community. And we're excited about NFTs as well. You'll have to check out our next episode where we're really going to dive into some of the amazing things that have been going on in the NFT space.
Yeah, I'm going to interview you about a few trips to Venice you've been taking to the NFT gallery, in-person NFT gallery. It sounded really cool, so I'm excited to...
IRL, NFT.
Love it. I'm excited to talk to you more about that on our next episode.
Well, great. Well, that's it for our discussion about what is money and this episode of the Block Explorer.
Thank you for exploring the world of blockchain with us, and do remember that crypto is risky.
Yeah, remember that crypto is changing the world. We want to help you adapt skillfully, so please subscribe and leave a review.
We're here to shape the world together, learn, and explore the block. Thanks for sharing your time with us.
Okay, cheers.